Good evening, everyone. Time for another member update. Now, this is the silver weekly chart, and the indicator that I pulled up this time is the on balance volume. And you can see here, although the price is about the same as, let's get an arrow here. You can see that the price is similar points here, but there's a divergence with the on balance volume. Now, the reading on the on balance volume is absolutely astounding. It's negative 450 million is the reading, and that's just insane. Unfortunately, we don't have on balance volume data from back in there, so I don't know what the reading was, but this is very startling. Now, on balance volume is an indicator. This actually comes from Joe Granville, and I'll read you the definition. On balance volume measures buying and selling pressure as a cumulative indicator that adds volume on up days and subtracts volume on down days. So that's basically what it does. OBV was developed by Joe Granville, introduced in his 1963 book, Granville's New Key to the Stock Market Profits. It was one of the first indicators to measure positive and negative volume flow. Chartists can look for divergences between OBV and price to predict price movements or use OBV to confirm price trends. Now, there's divergences, and there's bullish divergences and bearish divergences. We don't really have a divergence going on here, but generally the indicator is used to determine if prices are going to rise or fall in the next period of time. Now, the on balance volume being what it is right now, this is I don't think you would call this a divergence, but if it is, it's a very bearish one. You can see that. So what is it predicting? Well, it seems to be predicting new lows, and that would be absolutely startling. Can you imagine if we got 13 or 12 or 10 or $8 silver? What is that going to mean? Well, we already know how tight we are. If you listen to the latest, I think it was Dave Kranzler, the one where Rob Kirby was being interviewed, there's some strange things going on that he mentioned there. There's also latest silver doctors, and the doc mentions that I think Sunshine Mining is not producing any blanks anymore, and there's a lot of stuff shutting down, and things are becoming tight. We just had the story recently that the number of gold eagles sold hit a record, and it was triple the previous month or something like that. So there's a lot of indications out there, and I've already pointed out the indications on the compare silver price site and the big divergence in premiums on the 90% bags. So there's a lot of indicators that the prices are that the supply is getting tight for the physical. Now, the other thing about this on balance volume, we're looking at gold here, on balance volume, and we'll go out to the weekly. So you can see, oh, I'm sorry, I thought I switched to gold. We want to pull this up with gold, and you can see even a more startling one here with gold, but you can see that gold is breaking down into new lows. We'll try to put a cross with both of them on it because gold has been weaker as of late. I don't know if I'm going to be able to do the cross and keep the indicator. So we'll see. Yeah, so there it is. So silver was already very, very low, and gold is just kind of catching up with it. So are we going to get that big spike down? I don't know. Now, I wanted to take you over to a chart of silver because we want to get an idea of where we're going here. This is a long-term chart, but before we do that, I want to take a look at this story. This is actually an older story, but it's starting to heat up again, and this is the Attorney General Loretta Lynch, and a crazy story. Now, all of you who've listened to me for a long time, especially the Bitcoin videos as well, when the powers that be were trying to sync Bitcoin with their arguments about money laundering, I pointed out that it was absolutely absurd where something that has a market cap below $1 billion could have any involvement with the $1 trillion world drug trade and the money laundering involved. So this money laundering thing is such a big joke. It's ridiculous. Anybody who sits there and thinks about it for a second will realize that if there's money laundering, which there has to be, we know, because the UN, I've gone over the reports before, the UN estimates the illegal drug trade in the world at somewhere around $1 to $2 trillion a year. That's the size of the illegal drug trade economy. Now, so that's a lot of money that needs to be laundered. And who can launder it? Well, the banks. That's who can launder it. Now, this one is probably going to come back to bite Loretta Lynch, the new Attorney General, because this is a deal that she did with HSBC. This is Matt Taibbi from Rolling Stone. 3 years ago, the then U.S. Attorney of the Eastern District of New York, Loretta Lynch, crafted a soft-touch deferred prosecution deal for Europe's largest bank, HSBC, which has only been caught in the largest drug money laundering case in history. Today, as Lynch awaits approval for the Attorney General job, HSBC is in the news again. This time, the global mega bank is being exposed in a massive scheme to help wealthy clients avoid taxes. This is from the New York Times. This story traces back to leak of files apparently stolen by a former HSBC IT employee named Hervé Valsiani in Switzerland in 2007. Taken out of Switzerland, the files were then shared with authorities in France, Spain, the United States, and Britain. And so this goes into the tax avoidance as well. So those are a couple of things that I want to talk about just to show you the difference between how the criminals, the banks, are treated. We know that Lynch let them get off with a fine. No one ever went to jail. And now we have this tax avoidance thing. And of course, no one's going to go to jail. That's how it works. Now let's compare this to the recently released Kent Hovind. And it's kind of an interesting aside here. Kent Hovind's made a couple of videos, and he has reaffirmed his heliocentric beliefs. So it's very interesting. There's a lot of clashes now between geocentric Christians, flat earth Christians, and Kent Hovind, because Kent Hovind, even though he's very, very anti-evolution, he's actually a heliocentric guy. But what I wanted to cover here with Kent Hovind is these legal problems. And so it started off with, remember what we were talking about with the Attorney General winking at drug money laundering and winking at tax avoidance. But you see, this is exactly what they got Hovind on. Hovind was originally reported to the IRS by Pensacola Christian College Senior Vice President Rebecca Horton in mid-1990s after she learned of Hovind's anti-tax stance. So this is where it started. He was anti-tax. Hovind's businesses had neither business licenses nor tax-exempt status, nor was it considered a church by people who worked there. So in other words, he didn't register with the government as a church. He probably didn't believe in 50c3. And by the way, with the latest gay ruling that we have, and we're going to have more rulings like that, people are expecting very, very soon for churches to be forced to go against their belief system and marry homosexuals. And probably the ones that refuse will have their 501c3 status pulled. So it's probably very likely that Hovind didn't register as a 501c3 because he didn't want involvement with the government. But then again, if you don't register with the government, then you have to pay taxes. The ministry's organizational structure was described by United States Tax Court as appearing to be based on various questionable trust documents purchased from Glenn Stoll, a known promoter of tax avoidance schemes, leading the court to conclude that Hovind used these trust documents as well as other fraudulent means to conceal ownership. And I've pointed out before, that was very poor advice and very poor decision making to go against the IRS. But again, that's not what the subject of the criminal charge was. The criminal charge actually had to do with structuring. And here's the criminal investigation. In the spring of 2004, the IRS conducted an audit and criminal investigation regarding Hovind's unfiled personal federal income tax from 1995 through 1997. IRS agent Scott Schneider said since 1997, Hovind is engaged in financial transactions indicating sources of income and has made deposits to bank accounts well in excess of $1 million per year during some of these years, which would require the filing of federal income taxes. On June 3, 2004, the IRS executed a search warrant in Hovind's home and businesses to confiscate financial records and attempt to deliver notices on federal tax liens, which Hovind refused to accept. Agents confiscated $42,000 in cash found in various places in the residence. 6 guns were present. Oh, wow, 6 guns. On July 7, 2006, United States Tax Court found that Hovind was deficient in paying his taxes totaling $520,000, and then there's a lien. But here's the real criminal charges here. On July 11, 2006, Hovind was indicted on 58 counts in the District Court of Northern Florida. The first 12 counts were willful failure to collect, account, and pay for federal income taxes. The next 45 counts were knowingly structuring transactions by making multiple cash withdrawals totaling $430,000 in amounts just under $10,000, which requires reporting, a technique known as smurfing. Now, I don't know the facts on that. I believe the Hovinds argued that they ran a business cash and that they had a payroll that they were doing. I don't know if the whole structuring law is just plain stupid, because if you think about it, if you have $10,000, which is the reporting limit, and then if you transact below that you're trying to avoid reporting. So then I think they have some measure like 3,000 or something, and you're going to move the bar down there, and then you're trying to avoid that if you do too. The whole thing is stupid. But the point is that the whole basis for having laws on structuring, which again is stupid in the first place, is to try to catch money launderers. In other words, people who are making money from illegal operations. Now, a guy who's running a dinosaur park, who's running a cash business, and is taking donations from Christians isn't running an illegal operation. He's not making any money from crime. So he's caught up in this web. And again, smurfing, for which his wife was also charged. The last count was corruptly endeavoring to obstruct and impede administration of the Internal Revenue Laws. Okay, so that's what happened to Hovind. He spent 10 years in the pen. He just got out recently. I'm sure that it was 10 years because he refused to admit that he was guilty of doing anything wrong. Regardless of whether or not you agree with him that it was right or wrong, that was his position, and eventually he got out. But he spent 10 years in the slammer for running a cash dinosaur park. And compare that to HSBC, which is obviously just one of the many corrupt banks that is laundering trillions of dollars of drug money, probably for the intelligence agencies and their black budgets. So it's very obvious who gets off and who gets caught. And it's starting to turn out now that the bad guys get off and the good guys get caught. Not that I agree with Hovind on everything. Now, last thing I wanted to talk about here is that silver price chart. This is, I just want to try to make an inflation-adjusted estimate here of where we've come from and where we're going. So there's a lot of points you can pick on here. One that really stood out to me is the $10 level. And the reason why is because $10 was the breakout point here in 1980, where it made the run to $50. It was a bounce off point multiple times there. You can see it was a breakout here and test point there, and maybe actually a point that we're going back to on the paper chart. And that's right there. So what is that value? Let's take a look and see what that value would be inflation adjusted. So if we had $10 in 1979, this is using the CPI, which is, we know, is bogus. But based on the CPI, $10 in 1979 is a present value of $32.87. So if we did the reverse logic on that and said, how cheap is silver in 1989 prices? Well, we have to cut it in half, and basically silver's about $7 right now, inflation adjusted. Now, you can also go and take this price spike. Now, a lot of people would say, well, you're taking the extremes, and that's one thing we see with a lot of articles, whether people are trying to debunk stocks or debunk gold, it doesn't matter. They're always going to pick points that are most favorable to their argument. So you have to be careful about that. That's why I picked 10. But let's say we do pick the $50 where it went to. And if we do pick that $50, then you can see with our inflation adjusted price, that gives us a price of $164 an ounce for silver to be equal to what it hit in 1979. Now, some people would say, well, that was a spike, that was ridiculous, and it doesn't really count for much. But if you think about what was happening back then it very well could. Because this was the time when Paul Volcker came in and had to force interest rates up to 20%. This wasn't just long-term interest rates. This was actually short-term interest rates. They pushed T-bills up to, I believe it was 18.5% was the high. So if you can imagine an 18.5% interest rate on the shortest treasuries that you have out there, that shows you how extreme of a situation they had. Now, the question is, can we do this now? Can we withstand 20% interest rates? What is 20% of an $18 trillion debt? 20% of $18 trillion is going to be like $3.5 to $4 trillion. That's more than all tax revenues. So that's bankruptcy. They can't do this again. So that's one of the reasons why I think that that's actually a valid price. So we're looking at an estimate of around $150 for silver. Currently, we're trading around 10% of that. And the on-balance volume is actually predicting a catastrophic crash in silver. If we get that, that might be the final disconnect, because we're already at the very edges of the physical supply running out. So we may be looking at the great disconnect coming up very soon. And we'll talk to you next time.